Saludos, I am Rodolfo Ramos, Bradesco BBI's Mexico strategist, and welcome to This What's Spot in Mexico, our bi-weekly video product to bring you our latest views. As you can see, New York City is not short from great shooting locations, and as soon as we got a little bit of a great weather window here, we headed down to the Dumbo area here in Brooklyn. So I hope that you enjoy this beautiful scenery of the Brooklyn Bridge behind me. So kicking off here with our content, we're going to be covering three topics as we normally do. First, we're going to be talking about the Pemex rating upgrade. Second, we're going to be talking about Larrea's bid for Banamex assets. And third, we're going to give you some of the things that have caught our attention on the domestic side, and also some commentary on the international developments that we've seen that pertain to Mexico. So kicking off here with our first point of discussion, the Pemex rating upgrade that we saw from Fitch Ratings to BB+. This was done after it increased the linkage from 30 to 35 out of a 60 scale that Pemex has to the sovereign. This was done after successful asset liability management, and also previously after the successful PCAP transaction. We have certainly seen credit markets taking notice. We have seen the spread over sovereign that Pemex has continue to narrow all throughout Sheinbaum's administration. Clearly, credit markets giving the Sheinbaum administration the benefit of the doubt. In terms of financial support, we have seen greater support and much greater predictability and visibility towards future support. So this has boded well for that Pemex risk that we have continued to see narrow. The next point of discussion, in our opinion, will be on the operational side, which is where the policies, the more pragmatic policies that we've seen from the Sheinbaum administration are likely going to be key here going forward. We have seen a greater willingness to incorporate private capital in certain projects. We have already seen local players lining up to participate in some of these projects. We would love to see the larger international firms lining up to partner up with Pemex, and we believe that this is going to be a crucial aspect for Pemex to really turn around the declining production that it has seen over the few last years. So this is going to be the next thing that we will be monitoring. But overall, we believe that this set of more pragmatic policies bode very well for Mexico's narrative, for more pro-investment narrative for investors more broadly. So here, moving on to the second point of discussion, this Larrea bid for Banamex assets. The latest news is that Larrea declined to increase its bid for Banamex assets. Just a reminder that its bid for Banamex asset is marginally better than Chico Pardo's, but the structure of its bid is much stronger, being fully cash transaction. So basically eliminating market risk from the transaction itself. Fraser has already voiced a preference over Chico Pardo's bid, which is very much in line, as I mentioned, but it brings a little bit more of an institutional approach to the game with an IPO in the pipeline. So we do not see Fraser perhaps wanting to leave upside on the table here, and is likely going to be compelled to go to Chico Pardo if Larrea leaves the bid at the current levels. This is why we believe that if Larrea is serious about increasing in Mexico's banking sector, he's likely going to have to sweeten the deal here. So we'll see what the end of the story is. Maybe by the time you see this video, things have changed already, but we'll keep you abreast of this telenovela, which we believe is going to prolong perhaps longer than we would like. The third point here of discussion is on the domestic side. We have seen Sheinbaum really flexing political muscle in Mexico, which was not the base case maybe a couple of months ago. So this is something that we've seen very positive, even taking a stab at some of AMLO's more confident players here. But we do believe that she has a much stronger grasp of the domestic affairs in Mexico, and this is great news for investors, because she has come with a very pragmatic approach to policy making. And just as an example, we recently saw just yesterday her appointing, nominating the new members of the antitrust and telecom regulators, and these are technical profiles, some of which even were part of the previous regulators. So we see here a case of of the technical profiles taking precedence over political affiliation. So this is something very positive, and this is something that translates to other areas for investors as well in Mexico. And just lastly, let me close here with some views on the international side and the negotiations with Trump. We saw yesterday Trump meeting with Carney. It was a rather friendly encounter. They did have some tough discussions around trade, but nonetheless they had a constructive dialogue. We do believe that this closeness between Canada and the U.S. and this dialogue is likely going to lead to USMCA remaining a tripartite framework. I know that this bilateralism was raised to the question, but we continue to be of the idea that a tripartite is the base case, and this is also in the best interest for Mexico. When it comes to this for disputes and settlement, we believe that leverage is much better for Mexico if it's kept a tripartite framework. So this is something that is very interesting and sets the stage for really to Sheinbaum to try to vie for that in-person meeting that was not able to achieve during the G7 meetings in Canada. So we have seen every time that we have a telephonic conversation between Trump and Sheinbaum that the agenda moves forward and there's agreements being made and positive feedback from each other flowing across the headlines. So we do believe that a telephonic conversation would be positive, but I do think that an in-person meeting, even though it's a high-stakes event, it would help bring us closer to the end in terms of tariff discussions and other pending items on the bilateral agenda. So we do believe that the next couple of months will be critical for the tariff negotiations and also the USMCA review, which, as you know, public consultations have already begun. January, USTR is expected to submit a progress report of these findings, and the review is not expected to conclude until July of next year. Of course, we see Mexican negotiators try to get ahead of this schedule, but as of now, that is the base case line, and anything that comes sooner would be a win for Mexico to allay all of these concerns and this uncertainty, and really to help move investments forward. So these are the topics that we wanted to cover with you today. I hope you found it useful. If you do need to go into more detail into any of the topics that we discussed, feel free to peruse our reports and in social media. So until the next time, amigos, take care and have a good one. Ciao, ciao.